Hello, everyone. I've been asked this question a number of times, so I'm making a video to explain and show all the support and go into the nitty-gritty details of what is a reportable transaction for Form 5472. And this is for basically for if you're a foreign person and you have a single member and you have an LLC in the US and you open the LLC in the current year and you put money in your company bank account, you have to file this form. The penalty for not filing the form or for filing it late is $10,000. So you need to complete this form. And to answer my question, the reportable transactions are the same if it's a foreign-owned corporation or if it's a foreign-owned LLC, with one exception. So, and that's a single-member LLC. So partnerships don't have to file this form. So if there's a corporation, if you have a corporation, you have more than 25% of it is from a foreign owner, and a foreign person would be a non-US resident. That's fine, but you have to file this form to report the transactions, specifically listed, which we'll go over, between foreign related parties and the US corporation. And also you need to file it for US related parties, but you don't need to include the information. So you'd file this page for a US related party where you do business, and you can leave page 2 blank. So I'm not going to go into details of how to fill out the form. There's instructions, and I have them right here, so you can check out the instructions. But so we'll start with an LLC. We'll start with the corporation. If you're a corporation, the purpose of this form is to provide information required under these code sections when reportable transactions occur during the tax year of a reporting corporation. And a reporting corporation is a corporation with more than 25% foreign owners. And it goes through here: 25% foreign owned, 25% foreign shareholder, direct or ultimate indirect 25% foreign shareholder. So if this is owned by a corp that's owned by a foreign shareholder, then this would still indirectly be owned by a foreign person. So reportable transactions are any type of transaction listed in Part 4. We got that right here. Part 4, monetary transactions between reporting corps and foreign related parties. So this would be sales of stock and trade, inventory, sales of property, contributions, cost sharing transactions, rents, royalties, any other sales, any other consideration received. And this is sales you had, and then these are purchases the reporting company had. So if the company is purchasing inventory from a foreign related party, you just report here the total amount of the purchases during the year. And if it's all of your purchases are from this should match your cost of goods sold on your tax return. So these are, you have to fill this out, and you have to do it accurately. And again, if you do it incorrectly, incomplete, or wrong, or late, then the IRS is just gonna can assess a $10,000 penalty. If you file it late, they'll automatically assess the penalty. So don't file it late. Make sure you get your extension if you're not going to file on time. Otherwise, file before April 15th for individuals and corporations. And that's the date, April 15th. So the one caveat here, and the reason this all came up today, is that this is only monetary transactions for doing business. However, if you are an owner of a single member LLC and you're a foreign person, you need to report everything. So we go here, and I'm looking at the code, the IRS code sections, and the regulations. And you probably don't want to read this, but I'm doing it anyways. Such as amounts paid or received in connection with the formation, dissolution, acquisition, and disposition of the entity. So if this happens and you have a single member LLC that you own, so if you formed the company and you paid to form the company, you dissolved the company, you acquired a new company, and this is just an LLC in the US, very simple, then you need to file this form. And there's specific criteria on how you file the form. And again, that's what we do, and that's what we can help you with. But yeah, you need to file it. And if you don't, then the IRS is going to ask. They're stepping up their technology and their automation and following up with people. So yeah, it's not a tax form. There's no tax being calculated here, so there's no reason not to file it, especially if you're required to file it. So if you open an LLC in 2018, you're going to have to file this form by April 15th of 2019. And there's a specific way to file it, and that's it. So Comment below for questions. I can make another video to clarify, but this is really just like an awareness video, and I want to explain just basically what a reportable transaction is. So if you go back here, I'll link this Cornell Law School. This is the regulations. These are all the reportable transactions, foreign related party transactions. It's all of these, and then and this is just basically everything listed on the form. So this is just all the stuff listed on the form. If you didn't have any of these transactions, you don't have to file the form. Even if you're foreign owned, it doesn't matter. And yeah, you can see this is it. Reportable transaction, foreign corp that is foreign owned U.S. disregarded entity. So that would be an LLC, a disregarded entity, unless you made a corporate election. So yeah, you'd put that there, and I think you put it on other amounts line. So yeah, comment below for questions. If you found this helpful, if this applies to you at all, make sure to subscribe and follow. And thanks for stopping by. Hope this is helpful.